Okay.
That's all you do. You just put this in your mouth and just.
I gotta eat that.
Slurp all this hard stuff off and then it's just smooth.
Okay. All right. Hey, real quick. All right. Insurance. Let's do this one more time, then we got to get to our new stuff today. We're in section 5.4, 5.5. I kind of mixed them together yesterday. I think I said 5.5. 5.6. Okay. I must have mixed even more together than I thought. All right. This is based on insurances. Insurance on a vehicle. Okay. I want to go through the number system again, the actual terminology that they're going to use. So we're going to actually talk about what the actual price will be, so the actual cost of insurance. And that's using that simple notation that they have for the numbers. And you guys seem like you had a pretty good handle on this yesterday, but I want to kind of review that with you one more time. So if they gave you insurance that looked like this, I think this is one of the examples we had yesterday. Let's say that this is the insurance you can purchase. Okay? What this is what your insurance agent would talk to you when you're purchasing your car.
What is the I word?
Okay. What? Notation? Insurance?
I thought it was an I. It was okay.
Okay, alright.
It's good.
Now, what this is. The first two numbers on your insurance company, those prices are always added together. So, usually on a policy sheet, this is what it will look like. It'll have high, average, and low risk. There'll be a bunch of columns here, and they'll have different combinations. What do I mean by that? It could be this. It could be 5-10. It could be 10-20. It could be 20-40. It could be 40-50. Like, they could have just a ton on whatever insurance company you go into. What this first group, these first two numbers are, this is the actual personal damage coverage. Personal damage, so if you have like a personal injury. This is any vehicle damage that would be caused. And then this would be any property damage. The last number. Now on this chart right now, I'm only giving you the first two numbers, that's why I highlighted them. Because they would have a bunch of prices here. They would have a bunch of numbers, and they would just keep filling in the chart, and eventually we get to these high ones, which would be something like this. So, now, what these numbers are, this is the cost if you're going to go get full coverage. Notice that term that I just used. I'm talking about full coverage.
Yeah, full coverage.
Thank you, Matthew, but I don't know what the hell on that.
Hey. Okay, full coverage is anytime you buy a car or you lease a car, you rent a car, you have to have full coverage on that vehicle in case you get in a wreck, because your insurance company has to take over for that. In fact, you cannot rent a car unless you have full coverage for it, and you have to talk to your insurance agent. You cannot lease a car or purchase a car off of a lot without proof of insurance. This is a big deal. The minute you leave the lot, you're in control of that car. So you could get in a wreck 10 miles down the road after leaving the actual car lot. You have to have insurance to cover that. Okay. There was an accident here in town on a person that I know. They bought a car from Pritchard's. They were driving towards Ventura and actually got in a car wreck 5 miles down the road after buying a brand new Expedition.
Oh.
5 miles.
That's funny.
And they totaled it.
That's not funny at all.
Yeah. And the worst part was, they didn't have insurance yet. They were going to get insurance. They weren't covered. They weren't covered. So that car was out of their pocket, and they had to go buy a new one. So, got in a wreck. It was icy, and they spun out of control and got in a wreck.
Put her in the ditch or what?
Their fault. Because you have to go at a speed limit where you can control the car safely in whatever weather. They lost control. It's their fault. So, yeah, brand new Expedition. That is an expensive car, by the way. But it was during the winter. They bought an SUV. We're going towards Ventura, going to get insurance, and they got in a wreck 5 miles down the road.
So then
Yes.
what, they had to pay up?
Yeah, they pay damages, that loss of that car is on top of them, they have to pay it off. They're paying on a car that they don't even know.
Brand new.
Brand new, oh, so yeah, they're probably still paying it.
Oh my god.
Yeah, yikes. That's why, hey, what you do is if you're going and getting a car, you talk to the insurance agents first, they will have you covered. You talk to them and say, hey, I'm thinking about buying a new car, here's the model, here's the year, I'll let you know if I'm gonna get it. What I always do is I always confirm with them the day or two before if I'm gonna go purchase a car. Hey, I'm actually getting the car, here's the VIN number, here's the VIN number is the unique number to that car, here's the year, the mileage, everything, and I'm covered, and they will tell me that I'm covered on the phone, and I have it in text message, and usually they'll print off a little slip of paper that will have your insurance information, so I'm covered the minute I get in the vehicle and I click the seatbelt. That is what you should be doing, okay? Now, what this number is, if you're a male in high school, right, you're automatically in this range or here, and it depends on the premium. It doesn't matter. Females, you guys are lucky, you're automatically in these two, depends if you got a speeding ticket or not. You're in the low to average. And it's based on the premium. I'm gonna show you an example of this today.
Why are females in male secret?
Because they go off of percentages, and percentages of accidents are caused by males. So our insurance is almost double what females are the minute we get a car. They're more likely to get fixed.
I can see it.
So,
Yeah, I feel it.
yeah, it's sexist, but we'll go with it. All right, now, shh. All right, so let's do an example of what I mean by this premium thing. So this last number is property damage. This is usually a category off by itself. They would have a bunch of, properties. The 20, let's say the 20 column for the property damage, because they always have these off by themselves. These are extra cash that's on top. You can pay that on top of whatever the other number is. So in this case, let's say you're going for full coverage, you're getting an average, and you're going to 35. So you're going to 40, or the 20, 40, 20. Oop, I circled the wrong one. We're going the 20, 40, 20. So let's say this is 370. Let's say that that's what my coverage cost. And this was 400, and this was 350. Okay, so this is the number I'm using, because I'm going the 40, 20 and an average, and your insurance agent will tell you if you're an average, low, or high risk. Depends on how many tickets you get, how many wrecks you're in, the potential of what area you live in. Usually it's pretty average or low around here anymore. But you add the 370, you add it to whatever the property that you're purchasing. I'm purchasing a 20 agreement, so that's $35 extra. So what it looks like on mine, I'm at $405 for my insurance. That's over 6 months, right? Now this is a made up number, it's not mine exactly. And then what you do is you take that number, and if there's any type of surcharge or premium or it's what I call it the sexist number, where if you're a male, your premium on top of your insurance, no joke, is like 1.77. If you're a male, automatically. What you do with that, you actually multiply your insurance, whatever that number was, by 1.77, and that will be what your insurance is for 6 months. Now, females, this is the same car, same vehicle, everything. Their premium might be 1.2 if they're high risk. If they're not, it's just times 1, so that would be just 405. Now,
So what you're telling me is you really should just have like your wife or something buy you a car and you just pay it.
no joke. So, no
When
joke.
you register, you
No.
tell the insurance company you are changing
You wanna be alone?
and slower. And split the difference, actually.
So,
What if they can do
okay,
it now?
now,
It'll be
hey,
like 1.3.
okay, so
Yeah.
1.77. If I were to actually take my insurance times 1.77 to 405, what number am I getting?
You're betting you love it.
What do we have?
They're not decent.
$715.
There's free messages.
85. Okay.
I'm not.
Hey, here you go. Here's your first example. No joke. This is the sexist card they'll play on you if you get your own insurance in high school as a male. they multiply by 1.77, boom, you're at $716 in 6 months. That's over $100 a month in insurance. That's pretty typical. The minute males hit 25, and if you have a clean record, it immediately halves it. So what it does, and this is the worst part, it about halves it. It almost goes back to what females paid for the whole time you were below 25, which is sad. Now, it doesn't mean your insurance automatically goes up after one ticket. It doesn't. But it depends on the severity of the ticket, it depends on the crime that was involved, it depends on what happened there. There are certain insurance companies like mine, I have State Farm. They lower my insurance if I don't have any speeding tickets, claims, or anything. They just lower it kind of month by month sometimes. I think it was, what was the other one? It was Nationwide. They'll lower it as well. They'll actually give you kickback checks back every 6 months if you're a clean record. That's the same thing, it's just you're getting cash back in your pocket. There's certain companies that won't do anything. That's your insurance.
Hey, Ward, did you ever get any tickets or anything like that?
Me, I've got one ticket in my whole life.
For what?
Speeding on interstate. I was going 70 on the interstate and got a ticket.
Yeah, that makes sense.
That doesn't make sense. I entered the construction zone and he was at the beginning of the construction zone.
Oh,
And I didn't slow down in time before the construction zone started. So my ticket was 4 times what a normal ticket would be. And so at the beginning of the construction zone, I was going 70, the speed limit was 55, so I'm 15 over, and it was 4 times that. I paid almost $700 in a ticket.
Oh, yeah.
That's what insurance, we got that.
That was one ticket my whole life. I learned that lesson. Yeah, and the worst part was, I had no tickets, nothing. No accidents, nothing, other than the one that was in high school, where a kid backed up into my car in the parking lot. That's not on my record, because that was more than 10 years ago. And the cop looked and goes, oh, you have a clean record. That sucks. I'll get a ticket anyway. Yikes.
Like, let's say the cop gives you a written warning, is that how it is?
Written warnings are on your record. They don't, they'll keep them on there for, I think they say up to 5 years. And then if you get another warning, they just write you the ticket then.
Oh, really?
Yeah, so what happens when you're getting pulled over, they pull up behind you, they check your plate, they go in the car to confirm that it's you, and by that point, they already know if they're writing you the ticket or
So
not.
what, okay, so like I got a written warning in my car.
Yep.
Now that I have my truck, different license plate.
Different license plates, so that's why they'll pull it behind you, they'll see it's a different car, so then when they check your driver's license, then they'll see that you have it, and now you're getting the ticket.
Okay.
So he'll probably be really nice until you find out you've already had a warning, and now you're getting the ticket. So. Now, hey, here's something you also need to worry about. In Ames, in Iowa State, if you get a ticket down there, you can, not speeding tickets, but parking tickets, they give you like 3 freebies. So what you have to do is you just send in the ticket with your name printed on the back, and you don't have to pay it. You get 3 of them. After the 3rd one, you're paying whatever the bill is. Okay? So,
Or if you're still a student, then it goes in your bill.
yeah, it goes to your student, yeah. But you gotta sign that within like 10 days or something like that. And it has to be returned to that police department.
Found out the hard way down there.
Yeah, it happens. Everyone has that.
And then also speed
Is that just with speeding
They
tickets?
sell like a
Yeah, there's like a model park.
So say that you got a full policy.
Okay?
You can just put someone else's thing, couldn't you?
No, because it's registered to your car, and so that's the worst part. That parking ticket is registered to the car that you can legally park. And so that person is actually being billed and held liable to pay.
Okay, what if it was your wife?
Doesn't matter, they're under the same company.
I do, sir.
Yep.
Yeah.
So yeah, you have to sign it, it has to be the person who's ownership of the car. Now, okay. Now, these are the little things that people don't think about. You know, the premium price on top, the actual insurances that you're picking. Now, hey, okay, if you go with liability insurance, liability is super low cost. Typically, liability is below the $100 mark for your car. It doesn't cover any damages. So liability is only if somebody else was responsible for the accident, you'll be taken care of. It's basically like a written part to the state that you're basically forfeiting your right to insurance, but in case it's somebody else's fault, they can talk to your insurance company and they'll negotiate the price of what the payout is. So it's like the cheapest way to go, but if you cause the accident, you have to pay it out of pocket. So, because it is a state requirement that you have insurance. So you can forego it, and that's what liability is. But the reason why you have to have liability is because there has to be a negotiation between the companies so that they can pay you the correct number, and you can't just go, hey, you owe me $1 million. The insurance company tells you what they owe you. So, all right. Now this would apply like dire. Like you just bought the car, right? And you're still paying on it. You have a loan. You have to have full coverage. Have to. Shh. If you have a rental car, you have to have full coverage. If you have a lease car, I want to talk about a lease car today. If you have a lease, you have to have full coverage. Okay, now let's talk about what a lease is. All right. Okay.
Oh yeah, I think I remember.
Was that last year?
All right. Hey, I need everyone's attention to kind of these little conversations. This is brand new. Okay, a lease is when you're going in to look at a new car. It's got to be usually newer. You can't lease older vehicles. It's got to be something considered new. Not every model of car can be leased, so have that in your head. Certain companies, like I know Ford, they would not lease. Certain models of cars, like the Ford Focus, like the special edition ones, like the Ford Focus RS, or like a certain Mustang. You can't lease those. What a lease is, it is like an agreement that you're going to purchase the car. Okay? Here's the weird part. Okay, let's stop talking. It's the intent that you are going to purchase the car. Now that seems really weird to people. Like, you're intending to purchase it. What it is you are paying a super low fee to basically purchase the car right off the top. So now, what I mean by low, if you're gonna go purchase a car with a loan, maybe you're gonna go buy that $21,000, car, truck, and the lot. Okay, your payments on a $21,000 truck with certain insurances could be up to $400. Okay, maybe that's if you're actually taking out a loan, you're buying the car. Some people can't afford that. It's ridiculous, right? $400. That's a lot of money for 5 years, 6 years, for every month, up to that. So what people do, and this is actually a really smart thing if you're older, is to lease a car. Lease car, you have to put a down payment on the car. They usually tell you okay, you got to put $2,500 down to lease the car. That means you have to have a $2,500 check for them right off the bat. That's tough for some people to agree to. But here's the weird part. It's a brand new car, and your monthly payments might only be $200. And you're like, whoa, that's a new car that I get to drive, I have insurance, it's my car, and I only have to pay $200 a month for so many years. Okay? What you're actually doing, and I'll get to your question here, Jack. What this number is, it is paying off what the car company deems as the price that is, where the price is actually depreciating. So, and what you're paying is the depreciation of the car. What depreciation is, the car is losing value. You drove it off the lot, it's worth a lot less money because you're agreeing to buy it. It has now more miles on it than what it was brand new. So what you're paying with this $200 a month is you're paying what the depreciation of that car would be after so many years that you agreed to. So maybe you agreed to lease the car for 2 years. You are going to pay, and that payment will change, you will pay what the company deems is depreciation of value over a 2-year process. Maybe that car will lose $10,000 over 2 years. Because they looked at, NADA's website, they looked at all the previous cars that were been selling that are 2 years old. They'll see the difference in price, what they can sell for, and that's what you pay for that 2 years. I'm not saying that it'll be automatically $200. it depends on how far that car depreciates. Cars with super low leases are cars that hold their value really, really well. So when you go look at cars like a Jeep Wrangler, you want to go lease a Jeep Wrangler. The actual lease agreement is like $120 a month because they don't lose value. You'll have to put a really big down payment, but they don't lose value. You pay a really low price for a 2018, 2019 Jeep Wrangler because they don't lose any value. A truck, same thing. Up at Pritchard's, you probably saw this a couple times. They advertise a lot. A brand new 2019 Ford F-150, brand new, 2019, $300 lease. That's $300 a month. You have a brand new truck, 0 miles on it. You're like, well, that's not bad. I paid 300 and something bucks for my car. But what that is you're paying depreciation at the end of your agreement. At the end of your agreement, you are on the intent that you're going to buy it for whatever that car is worth at that moment. So right now, I know the truck, like at the very beginning, that's like a $45,000 truck.
I like the moment when your lease is over.
Yeah, at the very end of your lease. So you went 2 years, you put this money down, you paid this many dollars per month. At the end of that agreement, they are having this idea that you are going to purchase the truck for whatever it's valued at right now. So maybe that truck is only worth $35,000 after 2 years because it lost 10 grand. That's what you're going to sign the new papers for if you want to take out that loan. You don't have to. That's the crazy part most people don't wrap their head around. You don't have to buy the car. You can now switch. Like, hey, I don't want the truck anymore, that's too big. I want the Ford Expedition, or I want the Ford Focus. I want to totally switch up. I want to go to a different car. You can go sign a new lease agreement with a new car. It's like you're renting, basically. It's long-term renting. You pay your down payment, whatever that car's down payment is. You figure out what the monthly payments are going to be. You sign the paperwork. Now you have a brand new car. My neighbor next to me that lives here in Garner does this every 2 years. He has a brand new car every 2 years. He has to switch it up. He tries different cars all the time. He's a nice little old man. It's perfect for him. He's not paying $500-600 for a brand new car. Brand new. He's getting really nice cars. He doesn't pay the $500-600. He pays $100 a month because that's what he can afford with his Social Security check. He gets a brand new car every 2 years. And all he has to make sure is that he saves a little bit of money so that he can make his down payment. So he just saves a couple of $100 every month or two. And then at the end of his agreement, he gets a brand new car. He's already switched. I've been living in Garner for about 6-7 years. He's already switched 3 different cars, and he has really nice cars. But right now he has a totally loaded. It's a Ford Escape, but it's loaded. It's like the titanium edition. Like it has like everything. It has like the parking sensors where it backs up for him.
Wow.
It's awesome. Like, and he's paying like maybe $170 a month for a car, brand new, no miles on it. And then he goes, after 2 years, he goes gets his another car, and he switches it up. So, he doesn't have to do any maintenance on the car, he never has to buy a tire for the car, he never even has to do an oil change, practically, because he doesn't go that far, he's just a little old man. So he changes the oil once a year, but then he's paying like next to nothing, and he has a new car every single year. Maybe that's what you want to do, but here's the bad part. You can't sell it, it's not your car, you're renting it basically. So, you're renting it, you can't just get rid of it. If you get in a wreck, your insurance has to fix it. That's the bad news. And now you're going to have to pay the difference because now it's worth a lot less. So now your lease agreement might change. So that's the gamble.
Oh, there.
So, yeah, that's the catch. Get in a
It
wreck.
was smelling too good.
Yeah, it smells too good. When you get in a wreck, you have to now make up that cost because now it depreciates a lot faster.
Well,
So-
you know, man.
You drive like only so many places.
Yes, so great question. On a lease, now it smells too good to be true, right? Because you know you have to make that difference sometimes. But here's the bad part. Here's the bad part. You can only go so many miles on a lease. So that's a trick. Like you get to pick the mileage you want, but you have to pay for it. So most lease agreements are about 10,000 miles a year. You're thinking that's not bad. You do a lot more than 10,000 miles. I did a calculation this year. I didn't know how many miles I drove. I drove about 12 this year. And I drive a couple blocks. I don't go very far. My wife uses my car all the time for different reasons, because she likes the car better than an SUV. But I drove 12,000 miles. And you know, that's going a couple trips here and there. That's not going very far to work. So that's something you need to be cautious of. You can't use a leased vehicle to go on a trip sometimes. Like that'll put too many miles on it. So you gotta be thinking about that. Now, how that works. If you go over that magical number that they say, you have to pay a certain price per mile. It gets expensive. So, for instance, this is just one number I know of. Every mile that you go over your 10,000, it's 15 cents a mile.
That's a lot.
15 cents. You want to drive to Mason City, which is like 30 miles from here? You take 30 times 0.15. That's an expensive trip. That's not just